Hey guys, what's up? I'm Erin and welcome back to the channel. What does it take to build real wealth in America? Well, there are 5 key drivers that seem to show up again and again and again in the data. But most people are only tapping into 1 or maybe 2 of these. But for the people who build real and lasting wealth, they're stacking multiple strategies on top of each other, and it shows up in their net worth. In this video, I'm breaking down the 5 biggest wealth builders in America, ranked and backed by real numbers, and one of them may surprise you. If you're already doing 2 or more of these, you're likely ahead of the curve, and if you're looking to add a few more to the list, we'll talk through exactly how. And to be clear, this is not based on opinion or a get-rich-quick scheme. I'm using real data from the Federal Reserve, the U.S. Census Bureau, Kiplinger, NerdWallet, and more. These are proven drivers of net worth for everyday Americans. So let's dive in. Let's start with number 5, higher education. The data is crystal clear here. Higher education correlates with a higher net worth. According to Kiplinger, the average net worth of a college grad is over $2 million. The average net worth of a high school grad, around $400,000. That's nearly 5 times the level of wealth. And a big driver of this is income. According to the U.S. Bureau of Labor Statistics, with each subsequent degree level, median incomes go up. With a bachelor's degree, median income is around $70,000 a year. With a master's, around $80,000 a year. And with a professional degree, around $113,000 a year. And yes, the higher your income, the easier it is to save and invest and build wealth. The lower your income, the more of your income that goes to covering just the essentials, and the harder it is to find room within your budget to focus on wealth creation. You're just focusing on getting to the next paycheck and covering your essentials. But there is nuance to this, because it certainly matters what type of degree you get and how much debt you take on. The highest paying degrees include engineering, computer science, finance, nursing, and economics. As someone with a finance degree, I'm really excited to see finance on this list. And these career fields offer really great starting salaries and a lot of upward mobility. But there is a flip side to all of this, and I know we've seen the headlines, and that is if you take out $50,000 or $100,000 in student loans and enter into a low-paying career field, or enter into a career field without a plan, that can absolutely drag down your net worth for years or maybe even a decade or 2. The bottom line is education can be a powerful wealth builder, but only when paired with smart decisions about costs and career potential. Next up is entrepreneurship. According to the Small Business Association, small business owners have a median net worth of around $380,000, compared to just $90,000 for wage-earning employees. That's more than 4 times the wealth level. And why? Because owning a business gives you something that most jobs don't. An income that you can really take control of and really truly scale. But here's the thing, it's not easy. The average small business takes 2 to 3 years to become profitable, and many founders don't even take a salary in the early months. That being said, you don't have to go all in. For many people, it starts as a side hustle, and maybe it just brings in a couple $100s, or maybe even a few $1,000s a month. Maybe you look at it as a way to explore a passion. But maybe, if you're lucky, over time it grows into something that can be a full-fledged career and a valuable asset. Entrepreneurship isn't all or nothing. It absolutely exists on a spectrum. But the thing is, the benefits are truly real. Tax advantages, income flexibility, ownership of your time, and the ability to build something that grows in value over time. And just like investing, it rewards patience, persistence, and smart risk-taking. This next one surprises a lot of people, and I tend to get a lot of pushback when I say it, but marriage can be a major wealth builder, especially in long-term dual income households. Let's just take a moment to look at the numbers. And yes, all of these numbers are for the exact same age group, age 55 to 64. The median net worth for married couples is $269,000. For single men, $57,000, and for single women, just $45,000. That's a massive gap. Married couples are twice as likely to own a home, and that's a sneak peek because that's another one of the biggest wealth builders in America. And according to the St. Louis branch of the Federal Reserve, married couples have nearly 77% more wealth than single households with similar incomes. So what's going on? It's simple math. You have dual incomes and shared expenses. Say we have two income earners in this household, both making $60,000 a year. Well, now we have a household that has a $120,000 income, but we don't have two rents. We don't have two internet bills. We don't have two of every single bill out there. That margin between shared income and shared costs, that's investable, and that can compound quickly. Marriage also opens up some other doors to wealth creation. 80% of married couples own homes, compared to just 50% of singles. Dual incomes help qualify for better loans and larger down payments. Married couples are more likely to invest and to stick to long-term financial plans. There's kind of a financial chill factor when it comes to finances and marriage. You've got stability, accountability, and consistency. Here's one way I like to think about it. Marriage, when it works, is like financial leverage. It amplifies everything: your income, your buying power, your emotional resilience, and your long-term planning. But just like leverage, it cuts both ways. If it goes badly, it can destroy wealth too. The key is alignment. Divorce can absolutely be a wealth killer, but when it works, marriage is absolutely a wealth multiplier. Number 2 on the list is retirement accounts, and we're also going to throw in stock market participation here because there's overlap. Tax-advantaged accounts like 401ks and IRAs are massive wealth builders. The average 401k balance as of 2024 is $132,000. The average IRA balance as of 2024 is $129,000. These accounts grow tax-deferred or tax-free in the case of Roths, and the magic is in the compounding over decades. And if you work for an employer that offers an employer-sponsored retirement plan with an employer match, well, that's free money, and that really amplifies your wealth creation. Let's break it down. Let's say you have an income of $70,000 a year and you save just 5% of that. That's $3,500 a year. If you invest just that amount for 35 years using standard market returns, that could grow to nearly $430,000. But if your employer matches this with a 5% dollar for dollar match, that doubles your investment and doubles what your portfolio could grow to, ending up with over $860,000 with no extra effort on your part. Now let's zoom out a bit. The average annual return of the U.S. stock market over the past 70 years has been around 10%. But the total number of American adults who participate in the stock market, well, it's just 62%. But even modest investing can really make a difference. Put away just $250 a month for 30 years, and you could end up with over $500,000 in investments. That's why I say you can't afford to not participate in the stock market. Whether it's through a 401k, an IRA, or just a simple and traditional brokerage account, start where you are and stay consistent. And finally, the number 1 wealth builder in America: homeownership. According to the latest data, the median net worth of homeowners is nearly $400,000, and the median net worth of renters, just over $10,000. That's nearly 39 times the difference. Let that sink in for a moment. Let's take it a step further and break it down by age. The gap only widens over time. Take a look at this. Across every single age group, homeowners consistently have hundreds of thousands more in net worth than renters. Under the age of 35, that gap starts around $120,000. By age 65 to 74, it grows to over $588,000. It's not even close. This is what long-term equity growth looks like. That's not a small edge. That is a lifetime wealth gap. And why? Because as you pay to your mortgage, you slowly build equity in the home, and homes tend to appreciate over time. Say you buy a $300,000 home. Even with just 3% annual growth, in 10 years, it's worth over $400,000. Add in equity from monthly payments, and you could easily boost your net worth by over 6 figures simply by living in your home. And then when we consider that for many older Americans, their home equity can absolutely be a lifeline. It could be through downsizing, selling, or even a reverse mortgage. It can help cover medical expenses, long-term care, or fill retirement income gaps when needed most. The bottom line is homeownership is about more than where you live. It is a powerful engine that builds value over time. So what does this mean for you? What kind of common threads do we see here? Time, consistency, ownership, and intentional choices. Let's recap the top 5. Number 5 is higher education. Number 4 is business ownership. Number 3 is marriage. Number 2 is participation in retirement accounts or investment accounts. And number 1 is home ownership. You don't need to check every single box. Even having 2 or 3 of these, like investing consistently and working towards home ownership, these can shift your financial future. You can build wealth as a renter. You can build wealth if you're single. You can build wealth without a 6-figure income. You probably can't build wealth by ignoring investing. Because over time, compound growth is the game changer, and it's available to anyone who starts, even with small amounts. So start where you are. If you don't have an investment account or Roth IRA or some other investment account, open one up and contribute to it, even if it's a small amount. Maybe it's $50 a month, but continue to learn about finances, continue to grow and adjust your plan. And don't let setbacks hold you back. Remember, progress is not about perfection. It's just continuing to move forward no matter what life throws at you. So where are you in your wealth building journey? What do you think of this top 5 list? Share your thoughts in a comment down below. Do you have any that you would add to this top 5 and maybe one that you'd knock off the list? I'd love to hear it. I post new videos every single week. If you got anything at all out of this one, please give it a like. If you're new here, please consider subscribing. Or if you know of someone who might get something out of this type of content, please consider sharing. I'll see you soon. Bye. Friday afternoon, I'm filming, and if you know me, you know that is not a good recipe. I don't like to work on Fridays. Yet, nonetheless, here we are. Let's do this. It's gonna be fun. What are the odds you can hear that saw? Probably pretty good. Wait for the saw to end. Board's gotta end at some point. And if you're already doing 2 or more of these, you're already ahead of that's nearly 5 times the level of wealth. And a blah, 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 blah. That's more than 4 times the wealth level. I don't know where I want to go with this. The total number of US adults who are participating in stock market, okay? Like, that's not how we phrase it in America. I swear I'm from here. Now there's all these questions.